Welcome to Just Ask George. I'm David Wolf here with head dude George Lovato Jr. from BH Capital Limited. How are you?
I am excellent. I'm excellent. We haven't done this in a couple of weeks.
We're out of our groove, but we're quickly hitting the road ahead. The road ahead. Our segment on Just Ask George today, we're going to talk about the changing world, the changing role and importance of valuations. A business owner might ask George Lovato Jr., why do we need a valuation?
When a request would come along for real estate, it was always appraisal. That was always the divining document that sort of gave you the footing and the guide. And you still need appraisals, although there have been some recent articles criticizing how the appraisal market isn't reliable as it once was, and that's because bankers have really corrupted the process, because what they've asked appraisers to do in the last few years is give me the smallest possible, least possible, worst case condition. Give me the smallest valuation. What is what are we staring at that really is the true value if we sold it today? So they've taken fire sale and really lowered that number fairly dramatically, and as a result, it's not really a true picture of what is happening in the marketplace, and that's what appraisals are supposed to do. Now, valuations are becoming more popular because there's so many times that you want to know what your inventory's worth because you've put your inventory on your books at what you paid for it, according to GAAP. You may want to know what the business is worth because maybe this is the type of business where there's no real estate involved, but you've got a tremendous cash flow, earnings, inventories, so on and so forth. What's the business worth? Are you selling the business, or are you buying that business, or are you financing the business? In the case of financing the business, that inventory that's sitting on the shelf has a value because it hasn't been sold to the customer base yet. So give us a valuation on that inventory. Give us a valuation on what this business is worth, because if all else fails and I as a lender, I'm left with this business, where are those points of light, as George Bush would say? Yeah. Is it in the customer base? Is it in the inventory? Is it in both of those things? Is it other relationships that it has that really add the value, i.e. with raw material supply? Where is it? Where is the value? And so a valuation asks a question to the reader, what's the purpose and for the valuation, and then the valuation backfills those answers. So you may look at a valuation differently if you're buying a business as opposed to whether you're assessing where those points of light are. Okay.
How do the mechanics of an appraisal differ from a valuation? If you could differentiate that.
Yeah, certainly you can. The appraisal is going to use historical data, recent sales, comparative pieces of real estate in an area, in a geography, and then it's going to take that and extrapolate another number, what it would take to build that bricks and mortar, what's the cost of that, and it's also going to look at, sort of I got to sell it tomorrow kind of value based on weighting and averaging those comparative values and the cost of construction, et cetera. A valuation, as many hairs as I have on my head, you have a method and an approach. And I think you've seen that big green book, which is one of about 20 books I have in my library on valuation approaches. So it depends on the reason you're asking for it, what the environment is, the type of business, and specifically the purpose of the valuation.
Yeah, it really speaks more to the purpose of why you want to know where the points of light are.
An appraisal is right between the curbs, and evaluation may depend on the reason that you're asking for.
One other question comes to mind for our listeners as well. When you talk about appraisal, you immediately go to real estate. Are there business appraisals too?
Oh, sure. And, I can't tell you the number of times I have looked at a business appraisal and absolutely positively been either confounded, dumbstruck, or lost knowledge. Appraisers are good at using comparative values.
Yeah.
And when you ask them to step outside that,
Right.
I think they have. I'm not. And
Yeah.
all you appraisers out there, I'm not making any disparaging remarks. It's just I don't think it's an appropriate tool
Yeah.
for a business. And when you talk about business brokers saying, "Well, I've got an appraisal on this business," I really don't care what the appraiser said. Does the appraiser have experience in that industry? Does he understand what those little points of light
Yeah.
are? Has he evaluated what the customer list generates on an annual basis? They don't. They just usually say, "Okay, earnings are this. Multiply that by that. Here it is."
Yeah, it's a calculation. It's a mechanical approach to understanding where the points of light are, which is not as useful for an acquisition or any kind of, for financing. One last thing before we go, George. You hit on this a little bit. There's a delta around all this. Valuations have become more important than appraisals, or let me ask the question this way: how would you characterize the increasing importance of valuations? Why is that happening?
I think appraisers and appraisals are limited for a host of reasons. I think there's a question mark, as I mentioned earlier, about their relevance and their reliability. I think everybody from bankers to lawyers to accountants have asked so many questions about, how do you pay this guy to be independent and give you
the third party
objective,
thing, right? Yeah, objective.
And an evaluation, when you start looking at valuations, they're more dynamic, and they take into account an environment, an economic condition, and actually do identify those points of light individually. Case in point, a business, the value may be, as we had a client earlier this year, 60-some thousand customers that visited their website regularly and bought from them. That was really the value of the business, aside from having a great website. But I mean, that they could have sold that customer list for big bucks.
I love that, and I remember in that process you were really asking the question, where is the value? Is it in the warehouse? Is it in the customer traffic? Is it in the website itself? Is it in the people? You really quickly did what I'd call almost a business scan. Where's the real point of light?
And that point of light was the customer list. Now, an appraiser is going to say, "Well, you've got so much inventory, and you got and the earnings, they were lacking earnings." So he may have said, "Well, it's not worth much," but valuation is going to take those things into consideration.
This is fascinating, and of course, the logical extension of all of this, as a merchant banker, is you are relying much more on valuation, and you recommend that business owners seek one when they're looking for financing.
Absolutely, because it really tells a story about the business to the new lender or the new investors. Recently, I had a prospect come in and ask for me to help him raise money, and I said, "How much do you need to raise?" And he said he needed $750,000, and I said, "How much of the company are you selling?" And there was the dead airspace.
Yeah.
And I said, "You don't have a valuation of the company yet, do you?" And he goes, "Do I need one?" And I said, "Yeah, that's probably the first place to start, so we can figure out what we're telling this investor out there that is going to invest this money. This is what the company.
What does this represent?
Here's your percentage."
I love it. George Lovato Jr., BH Capital, www.bhcapitalltd.com is the website. You're with Just Ask George, where we explore the universe of structured finance, corporate finance, with one of the smartest guys in the business. George, we'll see you next time.
Thanks, Dave.
See you next time.
Bye-bye.